How are Chinese markets going to react to the numbers here today out of China, or do I focus a little bit more on the trade war and where a deal might be imminent?
Well, I think the focus will be on the deal because GDP is sort of a past thing. But I think people would look at the retail sales more closely because we had been seeing the strength in the retail consumption sector in China and Hong Kong for quite some time. So people are betting on the consumption economy. So the retail sales actually would be more critical. But if you look at the whole GDP, actually that would be dragged down by the manufacturing sector. And I think people could live with that. So I think the more important data would be on the retail sales side.
And just looking at the balance of risks, do you think there's more downside or more upside to equities right now?
I think
risk, of course, yeah.
I think there's some upside risk here. Even though we had been quite optimistic this week, we have priced in some good news. But I think people have been quite cautious. And if you look at the volatility, actually the volatility is reducing. So it looks like people are just piling up their positions right now. So there's some upside risk in the market. But I'm not too keen on Hong Kong names, actually, even though we see some recovery after the policy address. But I think that probably have some long-term structural issues. So I don't think Hong Kong names would be good. But I think China equities has some upside risk.
You don't think Hong Kong, I mean, some of these measures on housing is going to really move the needle here and really addressing the key structural issues that we see in the economy? Because the property stocks have really rebounded on the back of it. Yeah,
but I think there is more or less a strong rebound after a very huge sell-off and some short covering as well. But I think the point is we do have some pressures on the rental yields, and that is a very key issue because many developers actually are transforming, and they are more they pose more value in the landlord side. So I think that is the point why we are not too keen on Hong Kong names.
Alex, what about earnings? So 44%, according to our estimates, of Chinese companies have downgraded their forecasts for the most recent upcoming earnings. Is that a trend that you expect to continue, or do things to start turn around in the first part of 2020?
Oh, yeah. I think for consumption sectors, actually, that would be okay in earnings. But for macro-related sectors and the manufacturing sectors, actually, earnings will be bad. But I think people are already discounting that. The impact may not be too much. I think the focus will still be on the trade deal. And if a deal is strike, then people would upgrade their earnings again.
Earnings in light of your stock picks, because I noticed that you mentioned here that you're currently, of course, holding some stock. That's a given. Right. But you're reviewing those positions because of upcoming earnings. Can you tell specifically why? And are you looking at any specific name that perhaps you might be worried of?
Yeah, I would be... actually, I'm reducing Hong Kong names very obviously. And then we are reallocating some of my bets into the Chinese side. And I like Ping An Insurance a little bit more because it has been a very strong companies, and I think they would be gaining market share. So the upcoming earnings actually should be okay. I think that they have already surprising us on the upside. So I think these upcoming earnings will be okay.